So right now we're in market replay mode. I'll try to explain as best as I can of uh today's trade or today's trade Tuesday and how it became a turtle soup entry. So starting off, this was Monday, and we're just gonna go down till uh probably like London time, so 2 o'clock. I'll be right here. So real quick, on the 1 hour time frame, just to outline, we have this 1 hour fair value gap. Uh, because for prior knowledge we had SMT on the higher time frame, and from last week's price action, I I was looking for this week to sell, and we would get a nice entry in this 1 hour time frame, and then just sell uh below these lows initially. But because during close to London time we have some consolidation coming in, and I actually did try trading London. Um, at first I did try catching a short, but I got stopped out, and then ended up catching a long going into this fair value gap. Uh, but eventually got stopped out, ended off in like $100 profit. Nothing much, but uh, we'll continue. So keeping that in mind, um, since we noticed that this was going to accumulate, we wanted this red box to represent manipulation. Price comes into the fair value gap, hits equilibrium, and then we end off come morning time. I was looking for the New York opening to provide more liquidity on that sell. I usually do see sometimes that London does create like the low, or will show you the the bias for the next day, but that's pretty rare. It's usually used as like internal liquidity, and then during the New York opening we'll sweep either a high or a low and then rally or dump. So as we continue, we ended up seeing price uh, start to make some downward movement. That was when I concluded the accumulation, once we got that sweep of liquidity, right? So we'll end it there. And then price decided to chop a little bit, but eventually came back up into the fair value gap. If we listen to what ICT talks about for quarters or quadrants, we didn't even make it to the 25% mark, right? And basically, this just he explains it better, but there's equilibrium, which is always going to be the most optimal trade entry, and then you have the 75 and 25 point. Um, that also can work as equilibrium, but they're not as strong. So because we didn't tap into that equilibrium yet, not even the 25% mark, uh, I I was sleeping, but I wouldn't want to have entered off of this, even though this does align with what we're trying to do. So then this is almost New York Open. We get that nice sell off, right? Just like how we wanted, into this purple box and this yellow box, which we'll go over right now. So this is about the time that I did wake up and start to see price action. If Let's understand what our bias would have been waking up, seeing this happen, right? So we go on a daily time frame, right? Just to start off. I don't know why. Okay, well let's just go hourly time frame. So it's hard to see right now on an hourly time frame, but these are the daily candles, right? So lately we've been in an uptrend, right? And let's see if it shows better on a 4 hour. So if you look at the candles, we've been on a slow uptrend, right? This yellow box on the daily time frame represents a gap in price action, as well as a gap right here, but we'll focus on this one later. What we're focused on right now, imagine this candle is black all the way up to here, because this is where price action is at 5 o'clock, right? So pretending that this candle is black, we've been in an uptrend, right? Yet right now in pre-market, uh, after London session, it sets the stage for buyers and sellers to view price action in a discount. When we take, uh, right, well, let's just use this. When we take the high to the low, right, and this is a black candle, we're in a discounted price because we're below the 50% mark or equilibrium, right? And we're sitting within a gap of price action, okay? Knowing that, those two things, that defines our daily time frame bias. So then going down into the 4 hour, right? We want to see if we can find a PD array that aligns with our thinking. So it's very hard to pick uh, which wick or which candle fair value gap you want to use, right? You just have to play with it honestly and see how they react. So like this fair value gap, although we tapped out, right? It was close to equilibrium, so someone could have caught along there, right? It just depends on what feels right to you. So in this case, this felt right to me. This candle, right? This wick showed me that this was the last candle that showed a liquidity sweep, right? Which was this candle. We didn't sweep this, so this could have been seen as a stop loss, or maybe whoever was short, was trying to aim for this, right? And this liquidity, thinking this is relative equal lows. But in my head, uh, one thing that Romeo Trades does talk about is wicks are ranges. So I kind of use them as fair value gaps. If that's something that interests you, you could use that as well. But more importantly, it aligns with the daily price action gap, right? So pairing a 4 hour with a daily PD array that are relatively pretty close, and if you look at the daily time frame, look how exact that is, right? On a daily time frame, daily PD array, price action is damn near exact. Okay, so now that we defined our daily bias, that we're in an extreme discount, so what are we going to look for? Buys. What would be the most optimal entry? Well, right now we're sitting in this daily gap, but where are we going to target? Well, we can obviously target this high, right? But that's a bit extreme asking for about 200 points, right? So what's the next target we can target? Usually I like to do opens or closes of candles, right? But we also have this price action gap on the daily time frame. So right now we're sitting in the discount. We could aim for this, all even though we have the black candle going through it. This can still be seen as a target in price action, right? So what could we also pair it with on the 1 hour time frame? You could even go to the 4 hour, but because you already have, in my opinion, just because I had a 4 hour and a daily bias already, there's no need for me to go back to that time frame. I need to make sure that the lower time frame is starting to align and make sense with the higher time frame, right? So it's kind of like reversing your trade before it happens. So this is a bit noisy, so let's get rid of this. We have the fair value gap that we have not tapped into. So price, even if price action wants to dump, right? I still want to see price action tap cleanly into this 1 hour fair value gap, giving buyers or sellers a better chance to get a better entry, aka smart money, and then sell off, right? So we'll go back to the 5 minute time frame, right? We'll get rid of this. We'll get rid of these boxes. Now we have the 1 hour daily gap, and a 4 hour wick range. Okay, let's continue. And we'll go to till 7. Or my trade was at, yeah. Or no, sorry. I'm thinking Cali time. We'll go to 10, right? Actually, we'll go to 9:10 because I entered at 9:30 and exited at like 9:45. So, okay. We had a short-term retracement, right, into 15-minute time frame. Fair value gap did not get respected. You can call this wick a range, right? Usually if I see price action like this where this candle is at the bottom and then this candle is just a long wick and the body closes all the way up here, I'll still take this as a fair value gap. And I mean, you can't really argue it. Clean price action, right? Tap, low tap over, close outside the range, right? The box. What I like to tell myself is when we get a close outside of a box from a fair value gap, that's showing whatever that fair value gap um, is siding with. So in this case, bearishness, right? That's a bearish fair value gap. This is giving bearish behavior. Now, if it was the opposite, right? This, let's say, this fair value gap close outside, this would be giving bullish behavior, right? So it just gives you a little bit more confidence. But more importantly, we have time, right? Entering 9 o'clock near uh, market open, still pre-market, but we come back into the daily gap and the 4-hour wick range. But in this case, we sweep liquidity, right? There's people that went long. We sweep liquidity, giving us more momentum to do what? The actual move, right? This right here becomes turtle soup, and it will play in the 1 minute time frame now. So we'll zoom in, right? We'll get rid of this. Remember, targets are up here. This is where liquidity is sitting, because this is all oversold price action from London session, right? So we had just swept liquidity, and now we're thinking this just shows, this reaction shows you that this is turtle soup. Okay, so we have that market structure shift right here. Although we got that close below it, still changes uh, the structure of price action. Then you get this 1 minute fair value gap, right? Change this color. We'll put it red. Okay, pretty clean, right? Continue. Because this is kind of a weird range, and you're expecting this to be the low since it's turtle soup. At least below here. You would have to keep your stop below here, but I personally did not enter off of this because it just didn't seem right to me. It seemed like we still needed some momentum to move around, and I didn't like. I would want it to continue expanding and then see a 15-second fair value gap. That probably would have been a better entry for me, but we'll continue. So even if you kept your stop down here, you would not have got stopped out. It was pretty close though. So this was definitely a risky entry for anyone who entered there. But we'll continue. Come to 9:30ish. About right here. So you got that pre-market injection, right? Maybe news drop. You get that 1 minute fair value gap again. Tap into the daily. Get a nice close outside. Get it close on this fair value gap. Wicked on this fair value gap, right? You can call this inverse, I guess. Price action chops a bit. I believe on a 15-second chart is when I entered, but we'll just continue. Remember, targets are up here. Price action, fair value gap. If you held the stop below this, right? This was your entry. Equilibrium. Entry. Hold stop below that. Target whatever short-term high you want to target. Easy trade, right? To catch 2RR. Zero drawdown just straight to your TP. Would have been easy trade. But let's say you waited till 10 a.m. Now this is where I did get stopped out. I took profit here and then, or I believe I had taken profit here, and then got stopped out about here or something, or pretty soon I think I got stopped out. And then you got that nice rally, right? Some more chop. I think we got that retracement down, and then reversed back. But yeah, the main takeaway would be outline your weeks. So on a 15-minute time frame, what's been helping me is outline from 12 a.m. so midnight, right? Every day. This way, if you do this from last week, you take the high and the low and you see where price action's more likely to draw to. Is it is the week gonna look bearish? Is the week gonna look bullish? What is the week gonna look like? And then you look at it through the day. Will Monday accumulate? Will Tuesday manipulate? Right? This could be manipulation. Will Wednesday dump and give us that sell off to these equal lows? As long as you keep outline from midnight each day, it gives you a better chance to outline your objective on the weekly time frame. And you just got to go in on the daily time frame to find PD arrays as well as 4-hour time frame with things that make sense to you, whether it's the fair value gap, the order block, turtle soup, SMT, breaker, whatever it may be. But you use that and pair it with daily, weekly bias with those PD arrays. Hopefully that explained uh, the trade uh, and wasn't too confusing. But if there's any questions, you can always ask me.